Today we're taking a look at the week's biggest oncology headlines. This is your market checkup. Now, Max, we had a pair of big headlines this week for oncology drugs and the companies that make them. Let's start with Onyx Pharmaceuticals, which has a little bit of drama going on, that they rebuffed an offer from Amgen. Then it looks like they may have agreed to an offer at about $130 a share, but there could be a monkey wrench in that deal.
Yeah, this is the latest biotech soap opera, if you will.
And who doesn't love a good soap opera?
I know I do. So there was actually an article in Bloomberg this morning that said that in principle Amgen and Onyx have agreed to a deal, but it's possible that Amgen wants to see some clinical trial data before they finalize it. Onyx for sure has some very valuable assets in the oncology space. Their main drugs are Kyprolis, which is for multiple myeloma. It was launched about a year ago, so sales so far have been kind of small, but analysts think that it has blockbuster potential. Yep. Their other drug, Nexavar, is for liver and kidney cancers. And they also get royalties from another drug from Bayer. So very interesting company, kind of like a mini Celgene in some ways. And it's too bad for my personal portfolio that I missed this one.
Yeah, me too, Max, me too. So I think it's an interesting fit for Amgen, even though they don't have a whole lot of oncology assets. They have a handful. I think most investors have been looking forward to more their PCSK9 drug, but rumors were that Pfizer, Novartis, and AstraZeneca were sniffing around. It looks like Novartis and Pfizer may have balked. AstraZeneca is still doing some due diligence. Do you like that fit for Astra?
Not really. I'm not quite sure AstraZeneca could make it work. They don't really have a strong presence in the oncology space. And they have been making some acquisitions and smaller deals lately. I have a small list here. They made a deal with Moderna to develop some messenger RNA drugs, and there's some potential for cancer therapeutics there, but mostly for cardiovascular and metabolic diseases. They also made a deal with FibroGen for kidney disease drugs. And they've been making some acquisitions elsewhere, like Omthera for up to $443 million, but that's a fish oil drug to expand their cardiovascular franchise. And they also bought Pearl Therapeutics, but that's for pulmonary diseases. So yeah. I haven't seen a lot of strategic moves around oncology, so it seems to be a strange fit.
It would be a big move. They've actively talked about bolt-on acquisitions over at AstraZeneca. $10 billion is stretching the definition of bolt-on a little bit. Right. Actually, when you talk about all the companies, I think even though they balked, Pfizer would have been the best strategic fit. They just moved oncology into a division with vaccines, so it's kind of their fast-growing division. They have palbociclib in development with Onyx, which a lot of people see as a big blockbuster drug. It's going.
Yeah, it had breakthrough therapy.
Exactly, and they're looking for approval there. They're only going to give Onyx 8% royalties on that, so it's not by itself a reason to bring it in-house, but Onyx's other drugs don't really overlap what Pfizer's selling in their oncology department, so they have a sales force, but they won't be necessarily cannibalizing their own business. Novartis, there would be a little more overlap. Their best drug, Gleevec, is an oncology product. They have their second best drug facing generic competition. We've seen some good growth from other oncology assets. Breast cancer drug Affinidor grew 76%. Tasigna grew 33%. Like I said, though, there is some overlap. Unlike AstraZeneca, though, which looks like it's not really focusing on oncology, Novartis seems to be moving more in that direction because they also have their CART19 program, which is immuno-oncology for blood cancer. So, those two balked at $130 a share, which leads me to actually wonder whether, even though shares are trading under that, investors should jump in.
I don't think they should. I know I never personally participate in these kind of this kind of speculation because things could go wrong, a deal could fall through, and the share price could plummet.
Yep, I think in this case the downside risk for investors is much greater than the upside because I think we know pretty firmly where the upside really looks to be.
Right.
All right, so talking about upside, Eli Lilly saw some really surprising upside. I don't think a lot of people were expecting this. They had positive data in a phase 3 trial for necitumumab in non-small cell lung cancer.
Yeah. So we still have to wait for next year where Eli Lilly will present the full data around this clinical trial. So far, we just know that it met its primary endpoint, which is definitely positive news for investors. And we saw shares pop 2% on the news, which for a big company like Eli Lilly is significant. It was administered with 2 other drugs. One was Gemzar, which is made by Eli Lilly but is off patent, and cisplatin, which is commonly used in chemotherapy.
Yeah, I think the big surprise and the reason why investors weren't really prepared is because they were working with Bristol Myers Squibb on this drug, and in January, Bristol just washed their hands of the whole thing and canceled the partnership, walked away. And it looks like, in retrospect, and yes, you often tell me hindsight's 20/20, Max, but it looks like Bristol management may have screwed up here. But as you actually just said, we haven't really seen the data, and it looks like we won't see the data until maybe the ASCO conference next year.
Right, but actually, Eli Lilly stated in their press release that they expect to file for FDA approval before the end of 2014.
So,
they seem to be
survival
confident.
data should be pretty good. That said, should investors be that excited about this?
Absolutely. I'm not sure how excited we shall be, but if you look at Eli Lilly's current patent situation, I think any new drug that is poised for FDA approval is definitely good news. Cymbalta is the one that investors really need to worry about in the near term. Mm-hmm. Its patent is expiring this December, and it's currently Eli Lilly's top-selling drug. It brought in almost $5 billion last year. So when that goes off patent, revenue will deteriorate pretty quickly, and it'll be hard for Eli Lilly to close that gap.
Yeah, I think this is definitely really good news. And if you had asked investors last week which oncology drug they were looking for, they would have said ramucirumab and breast cancer. That data should be coming out soon too. So, Eli Lilly could end the summer with really great data or great news on two potentially key oncology assets. So, they can say, yes, Cymbalta is going away, but we're not. We'll still be here, and we have these late-stage pipeline assets. We're not just blowing smoke. This is a real thing, and investors should be excited about not just the distant future of Eli Lilly, but the near-term future as well, despite some challenges. Well, thanks for watching. That was Market Checkup. Stay tuned to Fool.com for all your healthcare news, and Fool on.